Hello, everybody. Thank you for joining us for today's public webinar. Hope you've all been well. It's been a little bit since we've had a webinar. Good morning, Jim.
Good morning. Okay. Very interesting time. If you follow our weekend blog or YouTube, what I have been focusing on are the 3, 4, 5, 6, this area right here that has been just refining the market for several days. The low on the big day that marks the low end of that range is at the 52.70 level. So what we've been saying is what we always say. Here's the market that's in balance. So it's a 3, 4, 5, 6, 7, 8, 9. This is the 10th day of the balance. What I wrote in the last week's blog, or not blog, but the YouTube last weekend, was if the market stays within this range, expect rotational days. And so we stayed within this range. Now, when you get to the extreme of this balance or trading range, then becomes a whole different scenario. Because when you're looking at something like this, the question is, do you break out of balance? These are the balance trading guidelines. Do you break out of balance? And if you break out of balance, you go with it. Or do you break out of balance and fail? If you break out of balance and fail, then the destination trade is the potential to the opposite extreme of the balance. So as we get ready for the morning, we're going to be right down near this range. I said that's the 70 level. What's the last? I think we're 52.67 last on the market. So you can see we're right at this lower extreme. So the trading guidelines for this morning are: do you break out of balance? So here are your options. You can remain within balance. If you remain within balance, then the potential is to rotate back towards the upper end of balance. Do you break out of balance, which would start a new leg to the downside, or do you break out of balance and fail to find downside follow through? So this is to give you, so many times what happens, we lose perspective. We get tied up in the market and the auctions during the day, and we lose a bigger perspective. So the first thing I do at the end of each day is I come back, and I'm going to start with the monthly, weekly, but I come down to the daily profiles to give me my perspective. So my perspective shows me we're at the lower end of this multi-day balance. So the question is, do we break out of balance to the downside and start a new leg to the downside? Do we stay within balance, would keep the market rotational? Or do we break out of balance and fail and then come back up? Tomorrow is a big number. We've got the PCE tomorrow, which we keep hearing is the Fed's, favorite number. So it's a big day tomorrow. This morning's numbers were okay, but this is where we are. Now, let's go look at the profiles. To further refine this, we would gap lower this morning. So here's the overnight low. So you see the overnight low was down below that range. We said that range is about 70. So you see we look down below it overnight. We don't count what happens overnight. Okay, so we've got for the opening this morning, it's the balance trading guidelines. So the balance trading, I'm not mean balance trading guidelines. The immediate this morning are the gap guidelines. Go with all gaps that aren't filled fairly quickly. If the gap is filled, then you monitor for relatively to developing value. Okay, I mean, that's basically what you're looking at today is the gap. The best selling on a downward gap, the best selling opportunity is on an attempt to fill the gap where both tempo and volume slow. If the gap, and this is a fairly large gap, and it's an important gap because what I've showed you from trade location, generally speaking, if a gap like today is going to be filled, you'll normally get buying almost from the opening bell and you'll get high confidence. I want to point out, doesn't have to mean anything, but we had no excess on yesterday's high. So I've circled this area, and so this usually what this means is we had weaker hands selling up here rather than bigger money selling, and it came from almost exactly the low from the previous session. So this is not, it's a nuance, but it's a nuance to be aware of. So if this market for some reason gets buying early on, keep in mind that this was not a secure high up here yesterday. Okay, Jen, let me take a couple of questions and then we'll do a commercial.
Okay, could you please elaborate on we do not count the overnight session?
But we don't, the overnight session doesn't count as a downside breakout. It has to occur during the daytime frame session. Now, if you remember, about 75% of the time, there is a counter auction relative to overnight inventory. So if overnight inventory is short, which it's clearly short today, the odds are 75% that we get a counter auction or a rally this morning. Now, if you don't, remember what we say so often is what doesn't happen is often as important or more important than what does happen. So if you don't get that counter auction this morning, the odds are you get the counter auction. If you don't get a counter auction, that's a signal of weakness. Okay, another question.
Okay, does the weaker high from yesterday reduce the odds of downside breakout, or should we keep that information aside until the market returns inside balance?
Yeah, you keep it. Yes, it does reduce the odds, but remember, they're only odds, they're not absolutes. And you're right, it's what I call, carrying information forward. You want to be aware it's there. You don't want it to stymie you from, and give you too much indecision this morning. But if you do close the gap, then you want to go focus on it. If you don't close the gap, then just put it aside for a later date. Okay, another question, and then we'll go to commercial.
Okay, somebody's asking, the regular trading hours low yesterday was a poor low as well. Is this also indicative of weak hands trading?
I clearly don't understand your question. Why was yesterday's low a weak low?
Or they said it was a poor low.
Poor low. Why was it a poor low? I don't understand. I don't see anything that tells me it's a poor low. I mean, if you can help me out, I just don't see it.
Yeah, come back and clarify the person that asked that. Why you thought yesterday's low was poor. Or maybe, you wrote up the question differently than what you were imagining. Sometimes that happens too.
Okay. Jen, why don't you do a commercial?
Okay, 1 second. Let me take the screen real quick and then we'll come back and take some more questions. Okay, can you see my screen?
Certainly.
I just want to point out for those of you that are new or not so familiar with our website, you can find our YouTube channel here. That's also where Jim releases the weekly week ahead video. So subscribe to that if you don't want to miss that. And then our official X is over here as well. You can see that we have the intensive featured up here at the top, but you can also go to courses at the top, navigation. This intensive starts next week on June 3rd and runs till June 28th. And, for those of you that are new, like I said, the intensive requires a prerequisite requirement of the foundation and application of the market profile e-course. Let me show you where that is real quick. Right here. This is the prerequisite requirement in order to join us for a live intensive. Why? Because we want to make sure that everybody's on the same page with the foundational concepts, has a good understanding of that coming into the intensive, because in the intensive, we pretty much hit the ground running from day one, and we don't want folks that don't have that good foundational knowledge to come in, be confused, and then ask the same repetitive questions, etc. I know that we get a lot of slack from folks that are thinking, oh, I already know that. I'll tell you, the vast majority of people that do end up taking the foundation e-course, even when they had doubts, come back and say, I learned some things and I understand why you guys made that a prerequisite requirement. It wasn't always the case, but we found that it was necessary with as many intensives that we did and with the types of questions that we get. So we do it for the integrity of the intensive, but we also really just want to make sure you understand how important the foundational basics are, because if you have a foundation made of sand, that's not going to be very good moving forward. So anyhow, with regards to the intensive, if you have joined us previously, maybe a long time ago for the intensive, you can be grandfathered in to join us for this intensive. If you haven't done the foundation e-course, otherwise that's the requirement. The schedule is here as well for you to download. For those of you who are in the class, I did find a mistake where I needed to make a tweak, and I see that this is not the corrected one. I think it's because it's cached here, but the schedule has been updated, and it's 61.5 hours once I found that mistake. Also, just want to point out we'll be covering The Biggest Bluff as our book. Jim, I didn't know if you picked a second book or not, but I guess that'll be TBD if Jim has any other books that he wants to discuss for the intensive. But if you have any questions about any of our courses, by all means, give us a call. I'd be happy to speak with you, answer questions, or shoot us an email at dalton@jimdeltontrading.com. Okay? Okay. Jim, I'll give you the screen back.
Please.
Okay. There you go.
Okay, and open for, nothing's changed since last time. We are set the gap lower, so gap trading guidelines are applicable. And as you remember, or if you came in late, I'm just going to one more time refresh where we are. This is the 1, 2, 3, 4, 5, 6, 7, 8, 9, 3, 4, 5, 6, 7, 8, 9. This is a 9-day trading range or balance. We're right at the lower end of that balance. So the trading, we have two rules this morning. We have the balance trading guidelines. Break out of balance and go, break out of balance and fail, or remain within balance. You remain within balance, all it does is further tightens it. Break out of balance to the downside, you want to go with it, and then you monitor for continuation. If you break out of balance to the downside and fail and come back in, then the potential destination trade becomes the upper extreme. As a nuance, there was no excess on yesterday's high. Additionally, another nuance is that this current rally high was made in the overnight or extended hour trading session. Can that last? Yes, it can. There's no rule that says it can't, but the odds against it are low. Okay, and then today we come back and as part of the review, we come back and look at today's profile, and we have the gap trading guidelines. So right now, I think about 5270 is about the low of that distribution we looked at. This is a lower gap, so the gap trading guidelines are applicable this morning. Go with all gaps that aren't filled fairly quickly, and I can't define fairly quickly. You just have to get it with experience. The best selling opportunity on a downward gap that's not closed is an attempt to fill the gap where both volume and tempo slow. If a gap, this is a pretty good sized gap, an important gap. If a gap like this is going to be filled, usually there is high confidence buying from the opening. Okay, questions?
Okay. Okay, so there were some questions about, regarding that poor low thing. I'm not sure if that person has a different closing time. We've got our charts set to our overnight session from 5 to 8:30. That's for Central Time, so you have to adjust if you're in Eastern. I don't know if that maybe caused some of that confusion. Yeah, some other people are also saying the person that mentioned that yesterday's was a poor lows, including the TPO that's formed after the cash close. So it's a matter of how we have our session times. For us,
Okay.
the overnight session is from 5 to 8:30 Central. Okay. Can Jim comment on the last 2 days that we had substantial moves in the last hour or so?
It's, from what I can see in the market, there's an awful lot of short-term emotional trading. And I must admit that the yesterday in particular did catch me off guard a little bit. It didn't hurt me because I'd taken a conservative position because of, major news this morning, but it really was aggressive, and particularly with the week high. But the most important thing is to keep in track when you get trading during the day, and it gets volatile and a lot of rotation. But I think the main thing yesterday, or what helped me, excuse me, I'm sorry. What helped me tremendously yesterday is what I say all the time, is value was clearly lower. So the market had a chance to move value up, and it couldn't do it. But I do think that you just got late liquidation, and it may have been some people anticipating some of the sales numbers. There always is, or some of the reports that came out after the close. There's always what I call the wisdom of crowds. One of the experiments that they've done over the years, and one of the simple ones is there'll be a big bottle of beans in one of the classes, and they'll ask all the participants in the room to estimate how many beans are in the in the bottle. And very seldom does anybody get it right or even come that close. However, when they take the average of all the answers from the crowd, it is amazing how close that composite answer comes to how many beans are in the bottle. So it's called the composite wisdom of crowds. And it may well have been that, the world doesn't live in a vacuum. And it may have been that there was the crowd vote on what some of the earnings reports were going to be last night. And that's not uncommon. But I think that there were some important earnings, and I would guess that had something to do with it. But the important thing was that value was lower all day. It had plenty of opportunity to get back, and really show something in the upside, and it couldn't do it. Okay, what else? And incidentally, just as a general rule, value is lower. Remember, value, the market profile, we are not market profile traders. The market profile is simply a graphic, and it organizes the market's continuous two-way auction process. It's a distribution curve. And this is what scientists have used, for years. And so all it's doing is organizing that data. Value is 70% of that distribution curve. As a general rule, you are better off if you trade with value. So when value is lower yesterday, your general short-term and rotational day, your general short-term trading pattern should be to buy breaks and take profits on rallies. So you're buying, below value or at the lower end of value, and you're selling at the upper end of value. And that's really what took place yesterday. And it was confusing because There was no real excess on the high. But what was important was the tempo. The tempo up there was absolutely terrible. Tempo it's like in music or speed. Tempo was terrible, and there was a tremendous amount of information in tempo. Too many people get too attracted to price, and they're watching price and what they want to have happen. But the message several times up near the highs yesterday was that the tempo or pace was terribly slow. Okay? Anything else?
Okay. To also point out, yesterday's high is not just poor, but also weak because it sold from a previous low area, but the 5,300 level as well. Do you agree?
Yeah, I think mechanically they're looking at 5,300, but I'm not gonna, I'm not gonna overwork it. Too many times we put too much emphasis on one piece of information. So I do think it was the 5,300 level. They couldn't get through that, and so traders are going to sell. Short-term traders are going to sell in there. So I don't fight that. But it's one. But remember, it's one data point. Too many times we get too focused on one single data point, and it is a data point, but it's only one of many. Okay, what else?
Okay. Do the overlapping TPOs from yesterday's session make trade to the high of yesterday's session? The high of yesterday's session more likely if we trade back inside yesterday's range?
If you get back within yesterday's range, then the poor high from yesterday, as well as the point of control, do increase the odds that you get up there. But again, the first thing you have to deal with this morning is the gap. Remember, you got two things. You got two major pieces of information this morning. You've got the gap, but then you are right. The 5270 is right at the low of the distribution. Let me put that back up. Remember, perspective. This is 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 10th day. We're right at the low of this distribution. A very, very important distribution. Do we break out? Do we break out to the downside? Do we look below and fail? Do we remain within the distribution? This is my number one consideration this morning. And remember, you've got big, important numbers from a trading standpoint tomorrow. Okay, final question.
Okay. What is Jim's thought about inventory in the overnight session? Asia opened and made the low. Europe took almost all of it back. That makes me think the overnight inventory is lightly short.
Overnight inventory is heavily short. I mean, we measure inventory from yesterday's settle. 100% of inventory is short. Okay? So I don't overthink. Don't overthink it. The main thing this morning is say, what does the market do with that? You've got the gap trading guidelines this morning. Does the gap hold? Does the gap not hold? And remember, we're almost exactly at the low from that major distribution. So hold your breath. Don't get too excited today because you could have a big day in either direction. Okay.
Jim, you have that line that says gap filled at 5270, 450. That's old, right?
That's old. I'm sorry.
Okay, it was confusing some folks.
No, I just hadn't. Here, it was just an old.
Yeah, that got filled on the 23rd. So I think that's why some folks were confused.
Yeah, I'm sorry. It's just sometimes I don't spend as much time getting prepared for the programs. Okay. Anything else?
Okay. By trading with lower value, did Jim mean sell rallies or the highs and buy back low, or did I get it wrong?
No, generally speaking, on a day like this when value is lower, you are generally better off to sell rallies and buy breaks. That's you're trading The value is lower. When the value is lower, I like to trade with value. Trading with value would be selling rallies and buying back on breaks. Okay? Thank you much and have a great day. Bye now.
Yes, and if you have any questions about any of our programs or whatnot, don't hesitate to contact us, and look forward to seeing you again next time. Have a great week. Bye-bye.